The Australian Bureau of Statistics will release its March quarterly inflation data this morning. The CPI, expected to show annual headline inflation, has slowed from 7.8 to 7.0%. The rate of inflation will influence whether the RBA will raise interest rates or not at its next board meeting. The RBA, of course, left rates unchanged last month. That was for the first time since May last year. Let's bring in the Chief Investment Officer at the Motley Fool now, Scott Phillips, for his thoughts on that. So, what do you think? What do you think, Scott? What are those figures going to reveal today?
Peter, my kingdom for a crystal ball. Look, I think, as you say, 7% is the expectation from some economists. I've seen some numbers as low as 6.8, by the way, which would be very, very good news indeed, because it is the trend the RBA is looking for. No one believes inflation is going back to between 2 and 3% anytime soon, certainly not this year, probably not even next year. The question is whether there's enough being done on prices for the RBA to feel like it can simply step back and say, yep, the trend is okay. It'll look after itself from here. We can be comfortable. Now, on the flip side, we've seen the UK inflation back over 10%, 10.1% there is their number. And that's the risk of not doing enough. So on one hand, plenty of people saying, you know what, stop the mortgage pain, I want to get off. On the other hand, plenty of people saying, you know what, I'm probably one of them. We're probably better to go a little bit too hard than a little bit too soft, because if you let that get away from you again, then guess what? We're back down the inflation rabbit hole and back down the interest rate rise rabbit hole as well. So the cost of not doing enough is more to be done in the rest of the year. If I was a betting man, mate, I think it's a pretty good chance we get a rate rise in a couple of weeks' time next week. That may well be the last one if inflation continues to come down and the economy continues to soften.
Okay. Yeah, and we've all got our crystal ball out, and often we don't quite get it accurately, but it's fun anyway. But more seriously, I mean, you've still got unemployment, which is at such low levels still, and then you've got housing prices. I mean, we're on the cusp of potentially another boom, some people predict at the moment. I mean, is all of this got to factor into the thinking?
Yeah, it has to, mate. If you think about, when can you objectively say an economy is too strong? And the answer is when unemployment is at record lows and inflation is at very high levels. Why? Because that's exactly what you would expect to happen with an economy that's exceeding capacity. Demand is exceeding supply. We know that. Now, some of that is supply caused, which is fine. But if you want to get those prices down, and I think we need to, you've got to look around and say, okay, well, if the economy is literally running at 101% of its capacity, we are going to have those things that break. Now, low unemployment is not breaking, by the way. It's a sign of that really, really strong economy. The inflation number is the thing that's breaking. And I think, to your point, that's why I just don't think there's enough evidence that the economy is in a hole of any sort. It may well be. It may well be a very significant, maybe even a sharp tipping point. But we might need that, mate, because, again, absent that, people are advertising on radio for individual company jobs right now, not just, a big BHP saying, hey, come and work for us. But you're hearing, particularly in regional areas across the country, people advertising, hey, we're looking for a diesel mechanic, we're looking for a chef, we're looking for something else. When you're paying airtime to fill one single job to keep your business going, that tells you exactly what's going on. So, yeah, look, I really, I feel deeply for people with mortgages who are looking down the barrel of another rate rise, and it's not fair. It's absolutely not fair, except that the RBA has got one tool. It has to decide whether it's the right thing to do or not. I think given that strength, as you've just talked about, and the fact, as you say, housing prices have stabilised. Westpac expecting a gain in prices this year in some capital cities across the country. So,
it's so
I think
ridiculous.
That's probably enough to get the RBA going.
When you say that, I mean, I know they've got one tool to use. I mean, it's just ridiculous that they've only got one tool. But anyway, that's 100%. Just another point. Meanwhile, AGL warning against government-imposed cyber ransom ban, Scott?
This is fascinating. Look, this is as much politics as it is business. I'm going to say it looks not an indefensible view, though. We have people watching with views right across the spectrum on this one. For a company specifically to come out, one with large amounts of customer data, and say, please don't ban us from paying a ransom if we get hacked. Maybe they feel like they're the customer's friend by saying, we will do what we can to protect your data. We're on your side. The flip side of that, of course, is don't get hacked, or at least do want to make sure you're not going to get hacked. And again, this is modern day piracy, effectively, Pete. It is literally taking someone's stuff for ransom. In this case, it's data. I think it's a brave thing. I don't think they're right, honestly, but I think it's a brave thing for any company to come out and say, hey, you shouldn't ban us for paying a ransom. Let us do it if we want to, because we want to protect our customers' data, even after we've been hacked. And that, by the way, hopefully, hopefully not emboldening others to do more of this. But if you start paying the money, you validate the business model of the hackers. I'm not entirely sure it's the right approach. Again, it's not indefensible. There is an argument for AGL's view, but for a company to come out and absolutely say up front, we disagree with the government's ban, we want to be allowed to pay a ransom, it's a strange old thing, I think.
Scott Phillips, good to see you, my friend. Chat to you again next week.
Pete.